Welcome one, welcome all to the Node, brought to you by myself, Mike, veteran crypto, and David, if he decides to join us. But if you would like to join the conversation, if you want to pop on over here to YouTube, you can. It is at the Node Network. You can join the conversation. You can ask questions, comment. Unlike many echo chambers or channels out there, here at the Node, we welcome opposing views. We want people to tell us, if we're wrong about something. It will force us to dig deeper and either find out that we weren't wrong or that we were wrong. And that's what we're about here. We're about giving good quality information and accurate information. Egos aside, if you're going to be a successful investor, you have to be open to new information. You can't just simply label it FUD because it doesn't match what it is that you believe. So looks like we got Ellie and Freak Atomic in the chat. Good morning, good morning. And yes, if you could, please like, follow, and share. We don't get paid by any institutions, any groups to talk about projects. We don't accept any kind of monetary or crypto payments. We feel that it's important that we stay impartial and that we keep our integrity intact. We want to make sure that that the information that we're putting out is isn't incentivized. So we do have ways that we have monetized, and I'll go over those here in a minute. But if you want to join the conversation, at the Node Network, all one word. And here you can find, we truly are a network. We have multiple channels. So you can see all of our past live streams here. Here's all of our shorts. This channel is the Node, Monday through Friday, 9 a.m., 11 to 11 a.m. Pacific. You have Crypto and Chill, Tuesdays and Friday evenings at 5 p.m. That's where me and Jeff just go over what happened, what's happening in the markets, and just kind of talk about life in general, just kind of laugh and joke. The blockchain report, those are pre-records that Jeff does on deep dives that he finds, and often airdrop farming. He's our subject matter expert on airdrop farming, becoming more and more difficult. As crypto goes more mainstream, it seems to be less and less profitable airdrops like there's been in the past. Sovereign Soil, that is the emergency preparedness and homesteading channel that I started with Drew. I'm a lot of them I do on my own. He shows up when he can. But I'm going to be doing one today. I was going to do it yesterday, but I had to run to town. I'm going to do one today on, and I'm actually helping my brother Taylor do this right now. He called me up yesterday when I was coming back from town on my run for supplies, and said he wants me to find him a property up here. So he wants me to find him like 20, 40 acres that he can build a cabin for him and his family, because he genuinely feels like things are going to get worse before they get better, and he wants to do a company retreat where from his law firm that he can bring people up to, and then when he's not here, he can Airbnb, so it's an income property. So he's just a lot of people. A couple people from our community are coming up, David included, to visit up here at the cabin. Some of them are talking about, if they like it, that they might move up here. So there's a lot of people out there that don't have a super positive outlook on what's going on in the world, and looking for a solid community of people to live a more healthy, a more sustainable life. So that's what we talk about on Sovereign Soil. I'm also doing a coaching program. I'm in the middle of working on it. We're going to wait to go live on it. We have a lot of stuff I should say David has a lot of stuff on his plate with the building the AIs and the website and things like that. So I'm just dialing that in, but that is going to be an offering at some point. We'll do one-on-one coaching. If you're overwhelmed, if you're trying to do, emergency prep, if you're trying to build a homestead, you just don't know where to start, or you're hung up on, a spot to where you don't know how to continue. It can be overwhelming at times. So that's a service that we're going to offer. The market wrap up. David does market wrap ups at 1 p.m. Pacific, 4 p.m. Eastern. On Tuesdays and Thursdays, he also does live coaching with Ellie, who's in the chat right now, where she is learning how to be a competent DeFi investor. So, the market wrap up is him going over charts of all the top altcoins and Bitcoin, and just kind of showing, where they're at, lines of support and, resistance, what the different patterns are doing. And, if we're looking to where we're potentially going to break down or, break out, whatever the markets are doing. Jeff, he does on Saturday nights, he has Saturday Night Fever at 6 p.m. where he does interviews with other DJs and they, share their music. They do sets. So that's, if you're into that kind of thing, they do tutorials. If you're aspiring to do learn that skill set. The Red Pill tomorrow night, this is where we talk about controversial topics, religion, politics, that sort of stuff. Tomorrow, I'm still trying to find single women that are willing to come on the show and talk about their dating experiences. I want to have a discussion about, from a male and female point of view of, the dating world today. There's a lot of posts that I'm seeing where women are going to singles events and there's no dudes, that dudes are just checking out of dating. And I'm seeing a lot of guys confirming that, to be honest, I'm kind of one of them. It's, there's options, but I honestly, I don't see a lot of good options. So, I've kind of, checked out of the dating scene. And then gaming and chill. So, Ellie and Jay, they stream on Wednesdays and Sundays at 6 p.m. where they, just play different, Arc Raiders is one that they, have been focusing on. But there's some other ones coming out like Windrose. It's a pirate game. We've been looking at Star Citizen. It's another, kind of cooperative, game that you can play with friends and stuff like that. So it's just kind of a social thing, where we hang out and play games. And then you got our X account, and it's at the Node Channel, all one word. And then you got the node.pro, which is our official website that David built. It's the node of the node. It's where everything comes together. So this is where you can watch us live. You can, chat. We have the links to the news that we talk about so that you can, trust but verify. And, you should always, verify information that you get, not just from us, but from anywhere. We have DeFi University, where a lot of the, all of the lessons, everything from beginner all the way to advanced strategies is no charge to you. You have no excuse to not understand crypto, wallets, risk management, the Greeks, delta neutral positions, looping strategies, all of that stuff. Other channels, they make you pay hundreds, if not thousands of dollars for their education systems. Here at the Node, we give it away at no cost. I'm not going to say the F word. So I can't stress it enough. People should be flooding in there for, the no cost education. There's no catches. And the private coaching, that is a paid service that, David is, pulled back the curtain on that. And that's what he's doing with Ellie. It is a bespoke, one-on-one, highly customized service that David provides, again, at a cost, but it accelerates the learning curve.
And Mike, about the coaching, just real quick, what I'm running through with Ellie, this is the same exact type of material that I run through with, high net worth individuals who are going to deploy $1 million. It's the same exact thing. It's literally just about building a skill set.
Well, and you've done this with 400 plus clients.
So if I had to put my finger on the number, it's greater than 300. There are like a little bit fewer than 700 people who I've actually worked with in total. But when it comes to like actual one-on-one private coaching sessions, I think that number is around 400 individuals in like 20 different countries, greater than 20 countries.
Yeah. No, so I mean, it's this isn't new. This isn't something that he cobbled together in the past couple of weeks.
No,
This
it's
is
over the course of years.
yeah,
Yeah.
and it's tested. And David himself, this is how he makes his living. He uses DeFi to and he shared with me, and I'm not going to out him. He shared with me last night, how much he uses, how much liquidity that he uses,
Liquidity.
liquidity, and and it's not as much as you would think. And he
No,
lives a very comfortable lifestyle. I was shocked when he told me.
I'm
I
living
was
in a beach house, bro.
no, that's what
You
I'm
know?
saying. But
Yeah.
your whole lifestyle is funded by I mean
Not like,
yeah,
it's not a crazy amount of money,
no,
It's not like you don't need, $500,000 or $250,000 or even honestly, if you're really, really good, you don't even need 100 grand. You could get it done with much, much less than that. It really
yeah,
just comes down to number one, controlling your expenses.
mm,
Okay. So, like, that means don't go out there and be buying a bunch of stupid shit.
yeah.
And then it also means you've got to be able to generate enough cash flow in your DeFi business, whatever that is for you, to cover all of your expenses and then some. And
Yeah.
that's what I do. So,
And I'm the master at that. When it comes to living well within my means, it's me and David were talking last night, and it's like I force myself to live only on my military retirement. I don't allow my lifestyle to exceed that because I want to make sure that I can keep adding to my physical gold and silver. I want to in my coin collection. I want to make sure that I can keep investing, more into crypto and more into stocks. And I want to keep growing with my investments so that when I get old, that I don't have to worry about money. If the government keeps up their shenanigans and my property taxes get to a point to where they're ridiculous, I don't want to lose my property. Because I can't pay for pay them to not extort me and take my property and throw me in jail.
right.
So, I'm using discipline now and focus to, not go out and use, what I earn and my portfolio to buy a bunch of shit that's not going to earn. So that's what we teach here. We teach mindset overall, is, discipline, focus, having goals, mapping that out, meeting those, setting milestones so that, you have, small accomplishments that can motivate you to the next step. So you're not just reaching for some brass ring off 30 years from now. You need to have smaller increments that what's called milestones, so that you get that endorphin rush. So where it's like our business we were talking about last night. We want to get it to where it pays for itself. Right now it costs us money. We want to
Right.
get to where it pays for itself. That is an awesome milestone. To just be neutral to where it's we're not making money, but it's not costing us money. Perfect.
Soon, soon.
Yeah, no, it's going to be here in a couple of weeks. We're getting really close. So, that's what we teach here. That's what makes us different from a lot of other channels out there is we are, setting you up for success because we give a lot of our stuff away at no cost. I mean, that's how confident we are is we don't have to have a payment wall to gate it off. We show you that what we produce is valuable. And then if you want to accelerate your education or take it to the next level, then yes, we have stuff that you can pay for. But we're willing to show you, give you a taste. The first taste is free. The next one will cost.
The first one's free.
Yeah, first one's free. The next one will cost you.
Well, what's so funny about that, Mike? There are so many of our competitors out there who, number one, they get paid by all sorts of different projects to talk about those projects. We don't.
Yes.
Okay. So that's a level of integrity that I don't think that they have that we do have. That's number one. But number two, a lot of the educational material that these competitors of ours, are putting out there, it's paid. So you have to pay to build your skill set. Now, I thought that that's a bunch of BS. So I decided to, just build all the educational material myself and give it away. So if the only thing standing in between you and a skill set that can change your life is you, that's
Mhm.
it. Like, how bad do you want it? That's
No.
the thing.
Absolutely. And I think the newsletter, I think all we got to do is we need to test it. We just need to sign up for it and make sure that all the the payment stuff goes through, and make sure that we can unsubscribe if people want to, and make sure that the email works. And so whenever you generate the newsletter, that you can see it on your screen, but you can also have it emailed to you. Just make sure that all the functionality works as it should. I think that's all we got left on this. So this should be launching here pretty soon.
Yes.
All right. And then, of course, you can go to the community tab. If you want to join our Discord, again, no cost. A lot of places charge for that. You can join our community, find a mentor. There's a lot of really good people in there. Scotty D is great at posting charts. Everybody's always in there posting funny stuff, of course. The mods are great about keeping scammers out. I mean, pretty much as soon as they jump in there and do anything scammy, I find it, I'm always monitoring it, and I find it challenging to get to them, to ban them before the mods and the community do. So, that's great. I'm very, very happy with that. But that is it. So let's jump into the news. Oh, let's add David Tignon. There we go. All right. So what do we got today? Well, actually, you know what? Let's share this so that I can zoom in. All right. So it looks like a little Canton news. So it looks like they've reached over 1,000 validators, each participating in relevant workflows while maintaining synchronized state across counterparties without global broadcast. So, on a daily basis, I'm seeing new institutions and whatnot joining and onboarding onto Canton Network. This is a bear market, and I'm seeing the most growth on this project. So I'm personally, full disclosure, this is one of my largest bags, and I'm actually earning with it. It's not much. It started out at about 50, 60 Canton a day, and now it's down to about like 5 or 6. So but it's just basically for holding it in the wallet, the Braun wallet. I stuck some in there, and I'm just earning. So it's very, I don't want to call it passive, but yeah, it is what it is.
It looks great. So Mike, about the validators, just real quick on Canton Network. So they've got these super validators. They manage the global synchronizer, and that group includes heavyweights like Visa. So kind of similar to how the Tron chain uses some really big institutions as super validators. It's similar over on Canton, just there are many more validators on Canton than there are on Tron. Just making a comparison between Canton and Tron, since we were talking about Tron yesterday. But yeah, so 40 to 50 super validators. They just hit 1,000 validators in the total count. We are one of those validators, by the way, or at least we were given a seat. So yeah. I haven't figured out how to set the thing up yet, but need to dig into that. Looks like they've got a lot of expansion plans. They're looking to onboard new validators through DTCC, and it looks like they're going to use JP Morgan's native JPMC integration, that JPM coin, and they're going to scale that out throughout the rest of this year. So, dude, the Canton Network looks to me like it's going to become, if it hasn't already become, the institutional chain. That's what it looks like. Yeah.
No, it definitely is starting to look like that. Anything can happen, but as of right now, it just the sheer volume, or the sheer rate of adoption has been insane. It's just something I watch on a daily basis, and there's a couple of websites that I can share that show the data. Actually, here I'll share one real quick. So there's canton.thetie.io, and then there's cantonscan.com, which are both really good. So this is the first one. This is Canton Scan. And so this shows like the burn mint ratio. And this is what I'm always talking about. Right now it's sitting at about 0.723. Once this reaches 1, then that is what they call equilibrium. So that's where is, as many tokens that are new tokens that are being minted, the same amount are being burned. And the way that this moves is based off network adoption and network usage. So the more that it's used, the more the network is used and the more fees that are paid, then the more that is burned, because all fees are burned. So, and then there's halvings as well. So there's already been a couple of halvings, in the mints. And so that decreases the new supply that's coming in as well. So over time, this potentially leads to it being deflationary and potentially price go up, because there's less, tokens in circulation, and you need the tokens to use the network. So
what we should do, Mike? We should put together like a deep dive into the Canton tokenomics, just like we've done for other protocols.
Absolutely. And this shows you just the sheer scale of the growth. So daily fees, I've seen this as high as 3 million, but I haven't seen it for a long time drop below 2 million. But between $2 and $3 million in fees per day is what this is generating. So, I mean, if that doesn't give you an understanding, and actually really quick, I'll go to rwa.xyz. Just for those that aren't familiar with this project. So you can look at, Canton, the amount of RWAs managers that are on this network is almost 8,000. It eclipses everything else combined. You look at the total value, $330 billion in TVL. It eclipses everything else combined. It's 93.33% of the RWA market. And keep in mind that this is represented. There's distributed and represented. So represented means RWA tokens using the blockchain as a record-keeping layer, enhancing transparency, reconciliation, and operational efficiency without enabling on-chain investor transfer or distribution. So, that is something to keep in mind. So anyway, just wanted to share that with you. So it looks like X rolled out a new functionality for Apple. It says X has always been the best source of financial news for traders and investors. Billions of dollars are allocated every day based on what people read on the timeline. Today, we're launching our new cash tags feature in the US and Canada on iPhone, bringing real-time financial data to X. How it works: when you search for or post a cash tag or a contract address, X will automatically suggest matching stocks or crypto tokens so you can select the exact asset you had in mind. Anyone who taps a cash tag will see posts mentioning it along with its price chart without ever leaving X. This ensures that you're always matched to the chatter for the right stock or token. Cash tags are just the first step in our commitment to be the best destination for finance in the crypto community. So this is just the first step, I think, to where X is, going to be the everything app, that Elon Musk always talks about. What are your thoughts on that, David? Are you froze up, David? Or am I froze up? I think David's frozen.
There we go.
Okay, there.
Yeah, no, I'm back. I'm back. My VPN was giving me a hard time there.
So, what are your thoughts on X and these new cash tags? And it looks to be that they're moving closer to being that, everything app that, Elon's trying for, banking and, investing and, all of that stuff.
Yeah. So, I mean, didn't he already build X back? That was one of his first companies. Yeah. Like a couple
X.com.
of decades. Right. Right. X.com.
Well,
Um,
and he did PayPal. He's the one that helped build PayPal and then sold it, and that's what he used to fund starting up all of his other companies, Tesla and SpaceX and X and
yeah. Yeah. Seriously. And, so that's a really interesting story too. Everyone in that PayPal mafia. Um, but X is becoming a financial hub. And I think early access, Mike, to this X Money Everything app rolled out or is rolling out now, April this month. Um, looks like they want to pay 6% APY. And so those cash deposit balances are going to be held by Cross River Bank. That's FDIC insured. So,
oh
this is,
shit.
yeah, this is TradFi, right? You're going to be able to get a metal Visa debit card. Okay, great. Now, one thing that I'll say about debit cards, though, Mike, I really, really dislike those products. Debit card products, man. Like when you spend money using a debit card, you're spending your own money. So if there's something wrong or there's some type of fraud or whatever, your card gets stolen, who knows, anything, that's your money, right? And you're never going to get it back. The banks are not going to reimburse you if there's some type of problem.
Some banks do. Like I use USAA because I'm a veteran, and they actually, if I call them and say that my debit card was used, and not all banks do this.
No.
USAA is just a great bank. They'll actually put it immediately, no questions asked, back into my account.
Yeah, well, most banks don't do that.
No, they don't.
So, but the difference is if you're spending your money from a debit card, that's a hell of a lot different than spending the bank's money using a credit card. So, I will, for every purchase, either use cash or use a credit card. And the credit card that I use is just a crypto credit card.
Yeah,
So,
EtherFi.
right, exactly. So, it's just those debit card products, man, are super, super dangerous. And then once you get, so another thing that people have to understand is, how I've been working with Ellie to understand the authorization process, like the approvals. When you go and you connect your DeFi wallet to a DApp, that's like logging in TradFi. That's the analogy there. And then when you go to execute a transaction, first you have to sign an approval, and that approval is going to give you a spending cap. And that approval and spending cap, that is very, very similar to what happens when, let's say, you've got your debit card, right? And you want to, set up a subscription for Netflix or something like that. When you set up that subscription with Netflix, what actually is happening is Visa or a MasterCard, one of those two, those are the big two, they are essentially opening up an approved spending cap into your bank, into your bank account for whatever it is, $15 every 30 days or whatever. And so even if you lose that card or turn off that card, they still have that spending cap. They still have that approval. So that means they can just pull from your account. So it's very similar to, just leaving a spending cap, approval open and not revoking it. But it's really, really difficult to revoke those Visa and MasterCard approvals sometimes. And sometimes if you're working with like a shady company, you might revoke it and it won't matter. They'll keep pulling. So yeah, debit card products are dangerous, I think. But X Money looks really, really interesting, though. It looks like there's going to be real time peer to peer. So you can send money to any user on the platform via its Visa Direct, is what they're using. So, okay, look, I'm all for, people having access to better financial products. And then they're going to use these, you were talking about this, Mike, smart cash tags, where you can search for a ticker like BTC or Tesla and see real time charts and execute trades through an integrated brokerage. I think that they might be using Wealthsimple. Um, but the goal here, it seems as though the goal for this is to create like a Western version of WeChat. And WeChat is the Chinese, everything app, where
Mhm.
it's social media and payments and banking. It can all
Yeah.
live in one ecosystem. And then there's X Money, which is like the enterprise network. And so this looks really really cool, man. This is going to be a great app, and I see what you're sharing on the screen. Um, which feature is this? This must be the brokerage feature, or
It's just the cash tag, like, so like if you click on, a dollar sign BTC, the cash tag, it will bring up the chart. It will, and eventually, you'll be able to actually trade that asset and, do all that stuff. So it's gonna be for stocks and crypto.
that's pretty cool.
Yeah.
That's very cool.
Yeah. All
Yeah.
right. Let's go. So this guy, Peter Gurnis, I'm going to preface this. So he claims that he worked at World Liberty Fi. World Liberty Fi claims he never did. So I'll preface it with that, and I'm going to kind of summarize some of this.
Wait, what? Hold on. He's saying that he's the smart contract engineer at World Liberty Financial, and they're saying he never worked for us.
Yes.
Oh wow.
So, so I mean, if you want to see if you can fact check that, but he's claiming that he was, and the way that Trump is, and the Trump organization is, they're quick to sue people. So I would think that with all the stuff that he's saying, if it wasn't true, that he'd be freaking hammered with lawsuits. So he says, I am a smart contract engineer who built the function that lets one anonymous wallet freeze any token holder's assets in World Liberty Fi. I added it 1 week before trading opened. Nobody told the investors. At deployment in September of 2024, the contract was clean, standard ERC20, auditable, the kind of contract you show to investors and say, see, decentralized. But we made it upgradable. 11 months later, on August 24th, 2025, 1 week before trading, I pushed the V2 upgrade, the blacklist function. The freeze authority routed through a 3 of 5 multisig, where a single externally owned address serves as both the guardian and a signer on the multisig. One wallet, two roles, 3 of 5 votes to freeze anyone's tokens.
So here's the thing though, Mike. I'm pretty sure that this post, at least what I'm reading right now, is
Yeah.
that this post was meant as satire. That this was supposed to be like some type of detailed satire, but that because it was so detailed, the Zach Witkoff, who by the way, like, isn't
Okay.
that the son of Steve Witkoff?
I believe so. He's the guy that was on the Mario Nafal show with me, and I reached out to see if he'd come on the show because I wanted to talk to him about some of this stuff, and I never heard back. I mean, I mean, as big as they are and as small as we are, I mean, I'm not saying that he didn't come on because he was scared, but I mean, I didn't hear back, and we talked before the show and stuff like that, and built a rapport and things like that. And I even mentioned to him, about potentially coming on the show, and he said reach out to me. So I don't know. I mean,
Right. Yeah, no, well, I guess we'll see. But I think that this could have been meant as satire, potentially. At least that's what I'm reading here. But it's just kind of difficult to figure out if this post on X is the real deal or not, you know?
well, and that's what I was hoping that you could dig up while I was reading it. But I don't want to spend too much time on this. But it's very detailed, and there's a lot of stuff in here that there's other people claiming. Justin Soon, who invested in World Liberty Fi substantially, is claiming that his account was frozen. There's a lot of shady stuff that's going on there. We reported on last week where they took a bunch of basically worthless World Liberty Fi tokens. It's as you showed in the charts, as tanked like 90 something percent. They basically used that worthless token to take out millions and millions of dollars in loans in USD1, their stable coin, to where they're basically sucking that liquidity, out of the market. So
I
it's and
mean,
it and not
it,
too long after that, they took down their Meet Our Team that used to be on their website, and they changed their titles to crypto advocates and Web3 ambassadors instead of like the C-suite positions. And you got co-founder. Zach Folkman used to be the CEO, and now he's a co-founder. It's
so I gotta say, man, this is a bad look. You
it's
know?
a very, very bad look.
It's a bad look, bro. And so they've got this new banking license application, I think. Um, so on January 5th of this year, World Liberty Financial submitted a formal application to the Office of the Comptroller of the Currency, the OCC, to
Mhm.
charter the World Liberty Trust Company National Association. So that's a bank, NA.
Not a
And
chance in hell I would deposit somebody else's money in that.
so here's the core objective. The primary purpose of the bank charter is they want to bring the issuance of USD1, their dollar-backed stablecoin, under federal oversight. Okay, so that's probably a positive thing.
Yeah.
Um, so currently, most stablecoins are issued via like state-level trust licenses, like the Paxos coin or Circle's USDC. But if World Liberty Financial is able to obtain a national trust charter, it would bypass the need for state by state approvals. And that would mean that they would have a private digital dollar that's legal in all 50 states. So that's definitely, they're working to become even, I guess, more compliant than most of their competitors, which is, pretty cool. The bank would be based in Miami, Florida. It would have no FDIC insurance. So, that's one thing. Um, and the bank would directly manage the reserves that would be backing the USD1 stablecoin, and those reserves would be held in treasury bills and cash equivalents. So, that USD1 product, you see, here's the problem. You know, they didn't need to launch a coin like WLFI, like they didn't need to launch that,
It's
but
it's like most projects out there. There's a lot of projects out there. The token does nothing. It's not connected to
yeah,
the profitability of the company. At best, it's a governance token. It's just it's basically a way to generate revenue because they can sell it to build a business.
I mean, it kind of looks that way. And like, I don't necessarily want to throw shade without having like all the details of the WLFI tokenomics in front of me. But like, dude, I've been living and working in DeFi and crypto for years now. And I think I know a nonsense token when I see one at this point.
Yeah.
And that's really what it looks like to me. But then on the other side of the coin, no pun intended, you've got USD1. And USD1, it looks like a legitimate product. It looks like a legitimate stablecoin product. But why launch the Wolfie token? That I don't want the wool to be pulled over my eyes with
Yeah.
WLFI, like why launch the WLFI token? Like it looks like it was just a cash grab. And then,
So
he,
far, everything that Trump's done in crypto, as far as projects, actually in crypto, have been nothing but liquidity grabs. The Trump
like,
coin, the Melania token. I think there was a
yeah,
Baron token. Now
right.
you got World Liberty Fi. It seems like just everything he's done so far in crypto has been nothing but a liquidity grab.
Yeah, that is kind of how it looks. Because that's what's happened. That's what's played out.
Mhm.
If you accept investor money, and in the case of World Liberty Financial, it looks like it's 49% held by Arabs in Abu Dhabi. Okay,
Mhm.
so
Honestly,
they
it seems like it's like some weird roundabout way to gain favor with the president. It's like you buy World Liberty Fi or invest in that company. And I have nothing to support this, but just looking at like Justin Soon, he
right,
invested heavily in it, and very soon after, all of a sudden he got a presidential pardon.
right.
You
What
know,
the
the
fuck is that?
SEC recently just dropped, their 3-year investigation into him. And then you
Well,
got
but that SEC investigation getting dropped, I think that what the SEC was doing under the Biden regime was, wrong. So,
absolutely,
I'll put that part aside. But the presidential pardon, like the
yeah,
timeline looks kind of funky, right? Like if I'm Justin Sun and I'm looking to get a presidential pardon, and I invest $75 million in WLFI, and
yeah,
then a couple of months later I get that pardon, and
yeah,
then hey, maybe I want to sell that WLFI, and
yeah.
I can't. I'm
All of a sudden, it's
blacklisted.
frozen. Yeah,
Right, right.
yeah. No,
So it just
it,
looks kind of like, dude, it
the
doesn't pass the smell test.
the optics are terrible.
Yeah,
Yeah. So,
yeah.
all right. So it looks like Bitcoin developers have proposed BIP 361 to freeze early Bitcoin addresses that have quantum vulnerabilities. This includes Satoshi wallets and other OG dominant or dormant wallets from 2010 to the 2011 era. This is a big step as these wallets hold over 4 million BTC and are at high risk from future quantum computing attacks. So this is, kind of what we've been talking about and what David, pointed out with, the Y2K scare is leading up to Q Day, which is, where they, basically the day that quantum becomes a reality. They are hardening, these different, blockchains and different systems to quantum attacks.
Yeah, so BIP 361, right? So that is the Bitcoin improvement proposal, right?
Yes.
And so if we're talking about, you know, freezing, freezing, Bitcoin wallets, or freezing coins, dude, there is no way in the world that that's gonna pass. But those old addresses, maybe there's a way for those old addresses to, uh, you know, basically like be sunset, so that they
Yeah.
can be like phased out, and then you can phase in the new addresses. And it looks like, Mike, that almost 7 million Bitcoin, that's about a third of the supply, are considered quantum vulnerable because the public keys are visible on chain.
Yeah.
So those public keys, like if I'm a quantum computer, all I need is enough qubits and the public key, and I can derive the private key, which
Mhm.
means you're kind of screwed. Like if I can derive your private key from a public key, then I can move your coins,
Yeah.
So yeah, something's going to need to happen, but I think that I think that cooler heads will prevail, and we won't get 7 million coins frozen.
Hmm.
So
I tend to agree. Yeah, I mean that would be chaos. I mean, we're talking about World Liberty 5, freezing wallets and stuff like that. If Bitcoin all of a sudden, they're freezing wallets, that would just cause chaos. Because I mean, it's supposed to be decentralized. It's supposed to be, to where people, governments and stuff like that aren't supposed to be able to do that. So, if something like that was to, be allowed to happen, who knows?
right.
So it looks like the Clarity Act is off the Senate schedule next week. Senate Banking Chair Tim Scott has not scheduled the crypto market structure bill for the week of April 20th. Per Politico, Senator Tom Tillis will release the final draft this week, the last piece needed before the committee can call a markup. Even then, the bill must align with Senate Agriculture, pass a 60 vote on the Senate floor. They need Democrat support, which is somewhat hard, but there are some that are favorable to crypto legislation. Then reconcile with the House. If no markup is scheduled by April 20 to 25, midterm politics could kill the bill as bipartisan cooperation dies entirely. So this is what we've been talking about. The midterms are coming up in November, and senators, congressmen, stuff like that are trying to get reelected. So if a couple of key seats flip, then potentially, the Democrats could get the majority, and it could change, the whole, environment, and the whole temperature of crypto, and the ability for some of this legislation to pass. What are your thoughts, David?
Oh man. Well, it looks as though um, we don't have Congress people that represent us any longer. That's the way it looks to me. And with this legislation just effectively stuck in like a high stakes waiting room, I guess you could say,
Yeah.
it's going to require that there's bipartisan support. That's what it looks like. And if it's not going to even get sent to the floor for a final markup and vote, well, then it's not going to get passed. It's not even going to get voted on, man. So I'm just thinking to myself, what are the banks' stance here? Well, traditional banks have lobbied heavily for a total ban on stablecoin issuers to pay interest to users, which is like, if that gets into this legislation, then you know for sure that we don't have representatives that represent us any longer. They represent whoever's paying them. And so the banks are arguing that if the stablecoins offer a yield, it's going to trigger a deposit flight. Well, you know what? Number one, I don't
Good.
believe that. And number two, good.
Yeah.
Exactly. Right.
Banks suck. They mismanage. They freaking charge us fees for everything. They mismanage. The liquidity to the point to where they need bailouts. Using our tax dollars that they get interest free. Where if we want to borrow, money, we got to jump through a bunch of hoops and then pay a bunch of interest. Fuck them.
Exactly. And this guy Tim Scott, the Senate banking chairman, Senate Banking Committee chairman, he has reportedly held the bill back from a markup until this compromise can be reached. And dude, like the more that I just read about the way that this legislation is being crafted, it's just like super shady, man. Like super shady. Like you've got these lobbyists who seem to be literally controlling the Congress people who are, voting on this stuff or negotiating on the legalese in this bill. So it's a really bad look, in my opinion, anyway. Now, the SEC and the CFTC, you have that turf war too. So it's not just about the Clarity Act. Like for DeFi and crypto to really become legal and regulated in the United States, we needed not just the Genius Act, but we also need the Clarity Act. And, then you also have to make sure that the SEC and the CFTC aren't fighting against one another to figure out who regulates what. So we're definitely making progress, but this midterm deadline, like this May deadline, this is, we're up against a ticking clock because a lot of congressional leaders have warned that if this Clarity Act doesn't reach the Senate floor by May, then it's likely going to be just on the back burner for the rest of the year because you've got midterm elections approaching. And so just think about that too. Like, so wait, hold on. Let me get this straight. These Congress people, they can't do their jobs for us for like a solid 6 months,
Right?
Because why again?
Yeah.
Like, what the hell is that shit?
Because they only work like 100 and something days out of the year.
Dude,
Freaking, it's like, I mean, they've built themselves. I mean, what a ridiculous system where they get to vote like raises. They choose what days they work. And all these different they travel on the taxpayer dime. They get these golden parachute retirements or just holding office. Once it's insane.
It really is. It absolutely is. And I just I don't like the fact that our Congress people are bought and paid for.
Yeah.
I don't like that at all. It means that whatever legislation we get is
It doesn't
likely
serve us.
it's likely not going to serve us. It's going to
No.
serve some big bank somewhere. And that really sucks.
Yeah, it does. All right. Well, we got one more thing before we get into our major topic, but I don't know if you'd be able to, but are you able to do like one of your deep dive researches and get that going for Fireblocks?
Oh, for sure. Yeah,
Oh, thank you,
100%.
thank you,
Yeah.
thank you. So
Thank you,
that's
sir. Thank you, sir.
thank you, sir. Top of the morning too. All right. So the last thing I want to touch on this. This is something that was a big narrative for a while, but it has kind of fallen off everybody's radars. Is BRICS. I was kind of curious this morning. I don't know why I thought of it, but I was like, what is going on with BRICS nowadays? And those that don't know, that was basically a group of countries that was saying we've had enough of the US, using the banking system and SWIFT and the US dollar to strong arm us. And so we're going to come up with our own, separate, system. And they called it BRICS. And what it stands for is Brazil, Russia, India, China, and South Africa. Those were the initial five, but a bunch have joined, since then. So as of mid-April, BRICS is currently under the leadership of India, which assumed the rotating presidency on January 1st of 2026. The group has transitioned from an informal economic club to a massive geopolitical bloc that now represents nearly half of the world's population. Here's the current state of BRICS across four key pillars. India is positioning itself as a bridge between the West and the global South. The theme for this year's summit is Building for Resilience, Innovation, Cooperation, and Sustainability. The summit, scheduled for later this year in New Delhi, a key agenda focus on reforming global institutions, UNSC and the WTO, and promoting inclusive multilateralism. Tech export. India is pushing to export its UPI, Unified Payments Interface model, to other members to create a seamless, non-Western digital payment ecosystem. Membership and expansion. The group has significantly expanded beyond the original five members. As of early 2026, the membership status is as follows. Full members are Brazil, Russia, India, China, South Africa, Egypt, Ethiopia, Iran, the UAE, and Indonesia.
Wow, that's a bunch of places that I can't wait to go to.
Oh, but I mean, India and China by themselves is like half the world's population. So,
well, I mean, half the world's population is literally retarded. So,
oh
I
no,
don't know.
I mean a given. But you look at currently India and China are also where the a market share of the manufacturing is done. They control a very large portion of natural resources. China has gone into Africa and built schools and built a bunch of stuff to gain favor with the governments to basically buy rights to all of their mineral resources and things like that. So they've cornered the market in rare earth minerals almost. There's a lot of levers that are being pulled, and again, these are all countries like Russia, that had sanctions put on them by the U.S. That's why they went out. China, they've dealt with a lot of stuff with the U.S. So these, this is something that can't really be ignored. And it says while Saudi Arabia has was invited in 2024 and participates in most activities, they officially remain in the considering phase as they balance ties with the U.S. So if the Saudis decide to join BRICS and stop participating in, SWIFT and the traditional banking, infrastructure, what happens with that? That's a huge partner and foundation of the petrodollar. Partner countries in 2025, 13 countries were invited to be partner states, including Malaysia, Thailand, Nigeria, and Vietnam. Financial systems and de-dollarization. The most disruptive news recently involves the move toward a common currency project called the Unit. It is designed to
the Unit. That's right. I was just reading about that, Mike.
Right? It is designed to be anchored 40% in gold and 60% in a basket of BRICS national currencies. Not impressed by that. Blockchain payments. The bloc is actively developing a blockchain-based payment system to bypass the SWIFT network, aimed specifically at setting oil and commodity trades in local currencies. So this would be a blow to the dollar as the petrodollar. The RBI's role. The Reserve Bank of India has been leading a push to link the central bank digital currencies, CBDCs, of all member nations ahead of the New Delhi summit. So, I mean, this is just a little that's going on with that, that people have kind of forgotten about. But what are your thoughts on that? And then I'll hit this little bit of aerodrome news, and we'll get into the Fireblocks.
Sure. So let's talk about the unit. Okay, so that's the
Well, Jeff says that his unit's bricked up,
oh man, that's a shame, Jeff. You got to get that checked out.
right?
But dude, the unit is going to be this new global reserve asset. I mean, bro, that just sounds so stupid.
Well, if it's 40, I'm impressed with the 40% backed by gold. I'm not impressed with the 60% backed by member, current fiat currencies. Because
Yeah.
you look at those countries and it's laughable. You got like Nigeria and Thailand and Vietnam, and you got China and Russia, but it's not like their currencies are doing awesome. So anything backed by fiat, I'm just like, yeah, pass.
Yeah, I mean, seriously, and like, how do you even verify that it's actually backed by gold held somewhere and not just made up, you know?
Exactly.
But let's say that it is 40% backed by gold, legitimately held somewhere that you can't redeem it for. You can't redeem they call it the UMU. That's the unit. I think it's the abbreviation is like UMU or something. But so yeah, even if it is 40% backed by gold, the remaining 60% is a basket of dog shit. Like you've got your Umu currency backed by yuan and rubles and rupees and Brazilian reals and South African rands. Like, dude, give me a break. It's one thing if you dislike the US Treasury system, and I'm right there with you. And in fact, it's our fault in America that this is even a thing. Because if those retarded politicians hadn't been using the US Treasury system as a cudgel to beat other countries over the head with if they
Yeah.
didn't comply,
They
and
weapon.
instead, if they hadn't weaponized the dollar, then we probably wouldn't be in the situation where half the world's population is going to suddenly be using like fake made up money in order to
The
buy
unit.
yeah, the unit. The
They're all going
unit.
to be using the unit.
Right. I mean, dude, why don't they just use Bitcoin? Like back the thing with Bitcoin. If they were saying, hey, we're going to
Gold
back
and
this
Bitcoin.
thing with, back it with gold and Bitcoin. If that's what they were saying, I might even be on board.
Yeah.
If they're talking about backing it with gold and Bitcoin. But the moment that I hear, hey, yeah, no, you know what? We're going to back this with rupees.
Pass. Hard
Pass.
pass.
No, I'm
Pass.
good. I'm good. But
Yeah.
then, they're talking about this blockchain system bypassing Swift. Like this technology already exists, so
Yeah.
to use the unit, you need a
Yeah.
rail. So you need a rail so you can
You need to
use the
rail. You
unit.
need to rail the unit. It's all
Fucking
about railing the unit.
mainline that shit, dude.
Yeah.
And,
Right.
so it says currently most international transfers use Swift, right?
Yeah. Well, Swift, I think it's like 1/6 of kind of international payments and things like that are routed through Swift.
Right. So yeah, they're talking about using this BRICS bridge instead of using Swift, where you can send units. It's just come on, man. This just makes me laugh, to be honest.
What was it? The violent femmes with the detachable penis. So if you're sending units, would that be like a detachable?
I can't tell. It's like sometimes, man, I can't tell what's real. Like, is this real? Is this a real thing? Like, do
Dude,
people actually take this seriously?
like everything going on in the world, sometimes doesn't it feel like the Truman Show or something? Like aliens are up watching us like a reality show or
It
something.
really does. It feels almost like idiocracy. Yeah, a little bit. It's like the Truman Show times idiocracy.
Yeah,
Like I
like if the
can't.
Truman Show and Idiocracy had a retarded fish frog baby,
Oh
it,
yeah, dude.
it would be what we're going through right now.
Oh yeah, 100%. And it just makes me think like, oh, dude, I gotta just like keep my head down and stay away from all this nonsense because, like, I mean, this is serious. Like there's a lot of countries that are signing on to this.
No,
It looks like
and
they're
we
taking it
laugh. I mean,
seriously.
we're trying to make light and we're trying to joke, but I mean, this is serious. I mean, the stuff that's going on in the world, it's that the U.S. dollar and the printing and the inflation, and people are struggling to get by and just keep food on the table and a roof over their head. Mortgages defaulting or skyrocketing. People living off credit cards, private debt is skyrocketing. Default on private credit is freaking through the roof. I mean, it's insane. You have countries that we're talking about now in BRICS that are trying to dump the U.S. dollar as the reserve currency. You have Saudi Arabia, probably our largest ally in the Middle East. That
Well, they're not really an ally because we've sold them hundreds of jets, and you know how much they helped during this Iran thing? You know
oh
how many
no, I mean,
jets they
but
sent?
it's
Zero.
they are an ally
Yeah,
in the
exactly.
fact that they that they only accept or have in the past only accepted U.S. dollars for the purchase the sell of their oil. So that's why they call it the petrodollar, and
Right.
that's helped cement it as a world reserve currency. And so if Saudi Arabia, I mean the UAE already did, if Saudi Arabia and other oil producing nations decide, what, we will accept the CBDC for the Chinese yuan, and India and the unit, and all of these other things to purchase oil. That's a major blow to the dollar as the reserve currency.
I mean, it definitely could be. That's for sure. I just I would prefer to see Bitcoin become the world reserve treasury asset. That's what I would love to see.
Yeah,
And in the absence of that, you know what? Whether it's units or dollars, I mean, at the end of the day, man, is there really much?
you nut.
Is there really much of a difference? Like, if we're talking about units or we're talking about dollars, it's the same fake nonsense, yeah?
Yeah,
So, like, we need to start talking about gold, silver, and Bitcoin
yeah,
instead of dollars or units. You know
yeah,
what I mean? Yeah.
yeah. So, all right. So, last news before we get into Fireblocks. So, the Fireblocks news. So, Aerodrome locked tokens. So, over half of the Aero token supply is locked. The average lock duration is almost 4 years, which is max lock. 93% of locks are auto max locked. So, 93% of that, 50, 50 or 40 or 51%, sorry, is constantly that clock for unlocking isn't counting down. People are opting; they have a bullish long term outlook on Arrow, so they're opting to keep it max locked to keep their voting power maxed out, because that contributes to currently how much they earn in yield. 15,000 plus VE Arrow holders, 460 million plus distributed to voters to date. So just a couple of
Yeah, yeah, but uh, so this this protocol pisses me off, Mike. Maybe so like the 460 million distributed to voters to date. So I'm pretty sure that the way that the tokenomics work for that VE33 DEX, and I know that it's being changed, right? And that's a good thing. But I think that that 460 is a little bit misleading because I'm pretty sure that that's actually just trading fees generated when a trader decides to swap token A for
yeah.
token B. Those fees are routed by VE Arrow voters to pools, and the VE Arrow voters like receive those fees. So it's not really like there's been cash distributed to voters to date. It's just like part of this incentive scheme. And
No, because it's people are paying gas fees whenever they're doing swaps in ETH and different and whenever they those fees are then being converted into Arrow, and being paid to the people that have the locks. So, I mean, it is liquidity. It's real liquidity that's being paid to them. It's currently, it gets auto compounded, and it is an Arrow. So it's much more, volatile. So, the 460, at current value, maybe, that's less because, Arrow has taken a downturn, like everything else. So, I mean, I can agree with, that number might not, be accurate, but 100% of fees that are paid on the Aerodrome platform are either paid to those that lock or are burned. They're max locked, by the protocol, and they are kept max locked. So it's, for all intents and purposes, they're burned.
Yes.
So and that's just, that, I mean, you're right, to an extent, but it's but I mean, it's real liquidity that's being paid out to people. I'm hoping that, I'm really excited to see what the new platform is going to look like, and the added functionality of autopilot, because I really want to be able to have the option to harvest the yield from my locks while keeping them max locked or max staked. I mean, because they're moving to a staking verbiage as opposed to locked. But with that, let's jump on over to Fireblocks. So I'll preface this and let me know when the content's ready.
Mike, what happened? What happened to our background? It's all green.
Oh, I mean, I can change it back. I just changed it up, so I can change it back to that.
Cool.
All right. So Fireblocks, they launched what they're calling Earn. So they're saying it's the death of idle capital. So today, Fireblocks officially launched Earn, a native on-chain lending tool that allows its 2,400 plus institutional clients, including banks and treasuries, to deploy stablecoins into DeFi protocols like Aave and Morpho directly from their custody interface. The lazy capital is what they call it, problem. Fireblocks handled 6 trillion in stablecoin volume in 2025. Most of it sat idle between trades. Earn turns that volume into yield-bearing assets. Institutional DeFi. This isn't retail degen farming. This is Aave Horizon and Morpho being used by BNY Mellon and Revolut. As institutions earn yield, liquidity in DeFi protocols deepens, lowering borrowing costs and attracting more TradFi players. So, what are your thoughts on that? And is the content ready?
Yeah, well, almost.
Okay.
I've only got the an infographic ready so far. The slide deck and the video content are still in the works. Maybe another couple minutes for the slide deck, and then the video.
Well, we can give me your thoughts on this, and then I got the Paris Blockchain Week, some news that we can go over until that's ready.
Sure. Yeah. So Fireblocks Earn launched today, and it's their native on-chain lending feature, as you were saying, Mike, designed to eliminate "quote unquote" idle capital. And it looks like at launch, this Earn product, it's going to provide access to 2 major DeFi lending protocols, Aave and Morpho. And I actually removed all of my liquidity off of Aave last night because, here's the thing. I've just seen too many protocols make moves like Aave has been making, and then there's some catastrophic problem, and then you can't get your money back. So I just look at the first sign of a problem, and Aave has definitely shown quite a few problems over the last couple of months with its engineering team leaving, over this V4 upgrade, and then its largest risk manager, Chaos Labs, leaving again over the V4 upgrade. And then what I know of this V4 "quote unquote" upgrade is that they're moving to a pooled model where you've got a hub and spokes. And the goal here for Aave is to generate more revenue. That's their goal. But there's a history in DeFi of money markets using pooled liquidity like this, instead of isolating lending vaults, when they pool it together, there are a lot of protocols that have blown up like that. Euler v1 is the most famous example. Now, Euler v1 was exploited, but it's not like we should believe that Aave v4 is like impossible to exploit, because, we saw that $50 million swap where multiple layers of the Aave protocol failed all at once during that swap, which resulted in like 99% slippage for the user.
Well, and
So,
not to mention the third party V4 hooks.
so the hooks, that's actually Uniswap.
Oh,
So
sorry.
right, yeah.
Thank thank you for
Yeah,
correcting.
the V4 is, those hooks are for Uniswap contracts, but
Thank you.
it looks to me like this Fireblocks earn product. I mean, hey, this is probably going to be utilized by institutional investors, right? Who are using Fireblocks in the first place.
That's like I said, they have what is it, 2,400? Yeah, 2,400 plus institutional clients.
Wow. Yeah. So, I mean, we can actually start taking a look at that if you'd like to, Mike. I've got the content ready to rock and roll.
Let me hit just the Paris blockchain just real quick. I'll rifle through these bullet points. So, and then we'll spend the rest of the time going through the content. Decision density: 70% of the 10,000 plus attendees are C-suite executives at Paris Block Week. This isn't a party; it's where the next 10 years of market structure is being negotiated. Major theme: RWA's real-world asset tokenization. Expect announcements regarding tokenized treasuries and private equity funds moving into Ethereum and Layer 2s. Europe's lead: while the US deals with regulatory roundtables, Europe's MiCA framework has made it the undisputed hub for institutional digital finance.
No, it
So
hasn't.
I don't think
No, it hasn't.
I don't think so yet either, but it definitely moves it into the lead, because while the U.S. is struggling to get regulation in place, even though theirs is shitty, they at least have rules in place of the rules of the road for their institutions and their businesses to be able to participate.
Bro, fuck Europe and the people running Europe. And
Oh
like,
no, absolutely, but I mean, you can't ignore that they at least have a framework.
I mean, all right. Well, you know what I'm thinking about when you talk about like a Paris blockchain week, Mike? I'm thinking about how many of these executives over in Paris are going to get stabbed walking around the Louvre. Like,
But
that's what I'm
we
thinking.
gotta take that emotional or
I don't know, bro. It's
personal
true. It's
personal
true.
bias out of it, because that has nothing to do with crypto. That
I
has
mean,
nothing to do with finance.
I don't know.
That's just shitty governance. And the same
Yeah,
can be said about the U.S. Freaking walk be white and walk through a freaking the wrong neighborhood in a city, and you're gonna get stabbed or shot or robbed.
I don't know,
So
man. I don't
it's
know.
I do. And so yeah, I mean that's kind of I think it's important to just recognize that even though it's shitty legislation, that they are that they at least have something. If it's beneficial to crypto or not, that we can debate. And I'll probably agree with you, but we can't ignore the fact that they actually have some legislation where and laws, whereas our fucking political system, they're still trying to mark the thing up and trying to delay it for the midterms.
So just my last point on this, okay?
Oh yeah, go ahead.
This is kind of funny, okay? It's I find the metaphor here to be very interesting. So here's a fun fact about the venue where this Paris Blockchain Week is being held, right?
Yeah.
It's being held at the Carousel de Louvre, which is
The
literally
museum, the art museum.
it's literally right underneath that famous glass pyramid.
Yeah.
So what's so interesting to me about this is you've got, all of these C-suite, executives
Mhm.
meeting underneath this glass pyramid, and above their heads,
It's like the Illuminati or something.
it's like, bro, and then
It's like
like above their heads is like a no-go zone. It's
yeah,
like it's like crazy to me. Um,
it's like what do they call that? The those future dystopian. It's like this dystopian where you have like these ultra elites that are just like a stone's throw away from basically just abject poverty.
Cavemen. Yeah.
Yeah, yeah, yeah,
It's like literally like, they're meeting in like a secret bunker,
yeah,
and literally above their heads are like, unsavory characters. Let's put
yeah.
it that way. So just
Absolutely.
such a
We'll, we'll,
funny thing.
we'll go ahead and throw your up, and we'll jump right into this.
Awesome. So we're going to talk through Fireblocks. Yeah. Yeah. And so Frequency Atomic is saying no accident, in my opinion. It was intentional. Um,
I'm not going to disagree.
I mean, dude, just the idea of hosting an event in Paris, like the idea of it is attractive, but unfortunately, the reality of actually doing it, I think, is like you can't. You just can't, So yeah, I don't know if anyone's seen what that the Louvre pyramid, what that actually looks like now, walking around that area as an individual, just walking around. But yeah, so okay, the institutional operating system for digital assets. We're talking here about Fireblocks. So this is going to be and Mike, I have zero experience with Fireblocks. So I'm going to be learning about this for the first time along with you and everyone else. So this will be an interesting presentation here. So this is, a technical and operational analysis of the Fireblocks ecosystem. So let's check this out. All right. Physical security models fail in a programmable bearer asset environment. Okay, that makes a lot of sense to me, right? Because Mike, if let's say for the Node.pro, right, we have some bearer assets. Our bearer assets are, maybe stable coins, maybe AVAX tokens, maybe Arena tokens, maybe some Ethereum, maybe some Bitcoin, who knows, maybe a little bit of everything. These are all bearer assets. So, how do you secure a bearer asset in a corporate environment? How do you do that? Well, if you've just got a single private key, then you've got a single point of failure. Your assets are unrecoverable if they're stolen or you lose the key. So, in a corporate environment, to protect a corporate treasury like ours at the Node.pro,
Mhm.
like we can't rely on this. This is unacceptable. This is not going to work. And then you've got legacy multisig, and we were talking about this last night, Mike.
I know.
Where you
I actually finding this kind of amusing because we were talking
yeah,
about basically starting a DAO where me, you, and Jeff are the DAO members, and it works like a DAO should. Where as long as two of us agree, then then we can do whatever.
right. And maybe what we could do also is we could put out content showing ourselves signing,
Yeah.
and we could show real decentralized governance in
Mhm.
action. And then maybe we could, at Aave on those pieces of content and be like,
Yeah,
hey,
I go, this is how it's supposed to work.
hey Aave, yeah, this is what a DAO is, bro. Like,
Yeah.
maybe you should read up,
Yeah.
go to the node.pro, get educated.
Right.
Um, yeah. But then, so this is the legacy multisig, right? Where you've got
Yeah.
it's fragmented, but it's also public. So that on-chain logic is exposed, and I guess it says inflexible to update. Okay, I'm going to take it at its word here. And then you got this Fireblocks distributed vault. So it says protocol agnostic and fluid. So security decentralized at the mathematical level. This is what I want to learn more about.
Yeah.
What is the Fireblocks distributed vault? And why does basically every corporate entity use Fireblocks to secure their digital assets? Well, that's what we're going to find out. Okay, so what is MPC and CMP? Okay, so this must be the cryptography layer. So you see over here on the left-hand side, we've got these different layers. We've got the cryptography layer, we've got the hardware layer, we've got a governance layer, we've got a connectivity layer, we've got an application layer. So it says MPC CMP, that's the cryptography layer, mathematically fragments private keys without ever reconstructing them. I wonder how quantum resistant this is. And it says the cryptographic evolution matrix. So we've got a cryptographic attribute, we've got traditional multisig, we've got legacy MPC, and then we've got the Fireblocks MPC CMP. So on-chain footprint, single signer signature. Okay, so that's interesting. You can use one single signer. Okay, that's a good thing. Fireblocks, it says, is protocol agnostic. So I wonder if what they mean, Mike, and maybe you can find out as I'm going through this, but when it says protocol agnostic, does that mean that Fireblocks can be used to secure assets, bearer digital assets from literally any protocol, any chain? Is that
I'll dive into that. I'm just doing a post real quick to
Sure.
let people know we're doing a deep dive on this, and I'll definitely dive into that.
I think that's what that could mean. Not quite sure. And then it says communication rounds. So one round. So it says, and I'm assuming that this is the communication layer. So maybe this just means that it is much, much faster than legacy MPC. And then it doesn't really apply to a multi-sig. So that makes sense. And then key reconstruction, it says it's never fully reconstructed. But if you're using a multi-sig, then you need your keys. Otherwise, you can't sign. And if you're using legacy MPC, then that is mathematically reconstructed. Okay, so starting to understand this a little bit. Now, MPC CMP nodes, they collaboratively generate partial signatures using additive secret sharing, creating a valid, so that is elliptic curve something or other, signature natively supported by any blockchain. Okay, so if it's natively supported by any blockchain, then that's probably how they get to becoming protocol agnostic. Okay, so that's starting to make a little bit of sense. This is the cryptography layer. So now this is a little bit about secret sharing. Okay, so this is interesting. Proactive secret sharing transforms security into a self-healing process. Okay, so number one, here's an example. You've got a compromise. An attacker extracts a single key share from one node. Okay, the system proactively mathematically rotates the shares. So that means that even if there's a compromise, the system itself heals from it. Interesting. Very interesting. So, and then that is neutralized. So the stolen older share becomes mathematically irrelevant before the attacker compromises the quorum. So the underlying public key remains intact. So even if the attacker is able to steal a single key share from one node, the system itself heals from that, and the attacker isn't able to steal any funds. So that's pretty interesting. Let's continue on. All right, so I think that we're getting to the hardware layer now. So this is the hardware layer. It says here, Intel SGX enclaves. So I'm assuming that this is like a specialized piece of hardware designed to ensure that these root level server breaches yield only ciphertext. So not keys, not keys that can be used to move assets. So you've got hardware isolation. The CPU shielded memory region is physically inaccessible to the operating system or the hypervisor. I'm assuming that that's something like a supervisor. And then you've got encrypted RAM on these Intel SGX pieces of hardware, where any attempt at a physical probe or a RAM dump outputs just pure ciphertext. Okay, great. And then remote attestation. So the enclave cryptographically verifies its hardware integrity with the Fireblocks server before retrieving its unique database key. Okay, so this is like a shielded hardware layer for protecting your keys. Very, very cool, very smart. I like it. All right, so now we're moving on to the governance layer. This is the governance layer. So the Transaction Authorization Policy Framework. So they call it TAP. The TAP framework cryptographically enforces business logic. Okay, so step one, a transaction is initiated, and then you got gate number one. So you've got your source or your destination. Is the destination wallet whitelisted? If no, the transaction is blocked. Okay, I really like this. This is, taking, protection of a corporate treasury to like the next level. Really like this.
So real quick, it's basically what we thought. I mean, if you haven't already touched on it, sorry, I was only half listening when I was doing those posts. But it says chain agnostic is essentially means the platform is built to be a universal translator for the blockchain world. Instead of being locked into a specific network like just Ethereum or just Bitcoin, it treats all blockchains as pluggable resources. In the context of institutional finance and DeFi, this breaks down into three main technical and operational benefits. A universal interface. Managing digital assets usually requires different wallets, different private key formats, and different security protocols for every chain. How Fireblocks handles it, it abstracts that complete complexity away. Whether you are moving Solana, Bitcoin, or ERC20 tokens on a layer 2, you use the same dashboard and API. The underlying cryptographic heavy lifting is handled by their MPC, multi-party computation technology. Have you already gone over this?
Not quite, not yet.
Okay.
Yeah, so I mean, I'm just going through this, the authorization policy. So just to be able to, move assets, you've got a transaction authorization policy. So it's not as simple as, hey, I've got the asset in my wallet, I've got the keys, I want to sign to move that asset. If you're managing a corporate treasury, well, you've got an authorization policy that you've got to follow before you can even think about moving a corporate treasury asset. So if you want to initiate a transaction, gate number one is going to say, is the destination whitelisted? So if no, then the transaction's blocked right off from gate number one. If the destination is whitelisted, then that is yes, then you can move on to gate number two. And so gate number two is going to say, does the US dollar equivalent exceed tier one? So I'm assuming that tier one is some capital amount or capital requirement. And so if yes, then it's going to require 3 signers. So that's the multi-sig part, I'm assuming. And then after those 3 signers have signed, then it's going to ask in gate 3. So even after you signed in gate 3, then it's going to say, does this breach the 24-hour limit? And if yes, then even after the signers have signed, if it breaches the 24-hour limit, then it's not going to get executed yet. It's going to get escalated to a human admin, which is like, dude, this is great. And now if it doesn't breach the 24-hour limit, then it's going to execute inside that hardware layer. So this is great. This is so good. This is a way of making sure that your digital your liquidity respect. You got to respect the liquidity.
Actually, hold on. Let me pull that up. Keep going. I'm just going to pull that up.
Yeah, you got to respect the liquidity.
Oh, here it is.
Yeah,
here it is.
Let's see. Let's see it. I love it.
There you go. Respect my liquidity.
That's right, Ave. That's so funny, Mike. Yeah, man.
Yeah, Ellie made that yesterday.
I love it, dude. Thank you, Ellie. That's so cool. And then so here, the key insight, this transaction authorization policy, its rules are not mere software suggestions. They run directly inside the tamper-proof Intel SGX hardware enclave, making them immune to rogue administrator overrides. Wow, dude, this is really good stuff. So you talk about, protection. This right here, this is some serious protection. So, all right, mandatory whitelisting and administrative quorums eliminate internal collusion and address manipulation. Yes, okay. So for administrative quorum, so this is kind of like reaching consensus between humans. So geographically separated admins. So you've got a couple of,
Oh,
yeah,
dude,
yeah.
I posted and tagged Fireblocks. It looks like Fireblocks had jumped in.
Oh, I love it. I love it, man. This is great. So, maybe if whoever's running that account at Fireblocks, if there's something in this content that I'm sharing that maybe they would like to point out, hey, you know what, that's not quite accurate. I'd love to hear from them.
Well, I just want to let them know that we are a channel where we respect. We want to put out accurate information. So what David's asking is, if you're watching and we get anything wrong, please call us out in the chat and we will share it and we'll correct ourselves.
Yeah, 100%, 100%. So, this to me, mandatory whitelisting, this is great because imagine, Mike, you're running this isn't a problem for us, but let's just say that you're running a corporate treasury for a big corporate institution or whatever, and you've got 1,000 employees, and in the finance department you've got 10 guys responsible for managing this treasury. And what happens if those 10 guys, or maybe just enough of them who can sign, get together and collude in order to move assets to a wallet that they control, like steal from the company? Well, this mandatory whitelisting process and administrative quorums, it's going to eliminate the possibility of that internal collusion, and also eliminate the ability for them to manipulate addresses. So this is really, really good stuff. Really good stuff. The admin quorum. So a policy change request, it requires overlapping cryptographic signatures from multiple administrators before that hardware SGX enclave is going to accept it. So it's going to prevent unilateral rogue actions by internally colluding members of the business. So I like that, number one. Now, nothing's going to be perfect, but this is a great way of solving for that problem. Now, number two, this whitelisting mandate. So if a user copies and pastes a new destination, but it's unverified, then it's going to require that the admin quorum signs off. Otherwise, the system is going to block an unverified address by default. So it says an API-driven cosigner approval and admin quorum sign-off are required to prevent address swapping malware.
Because of that exploit that basically that changes. Hey, get off that. That changes the address. There's that exploit where if you copy and paste, that it basically changes your address to send your funds, your liquidity, to the scammer. So it looks like that's what this will help combat, is if somebody just copy and paste and doesn't verify the address. Look at the first 8 and last 8, not just 5 now, of an address, and doesn't double check it. It will actually be like red flag. No, don't send it.
Yeah, and I can think of a relatively recent and high profile exploit. Remember the Bybit CEO sent assets, $1.5 billion of, I think it was wrap staked ETH, to a North Korean wallet?
Yeah.
Like, bro, how did you do that?
That's probably what it was. It was probably that Lazarus group that freaking, put some sort of exploit on his computer, and he copy and pasted and it changed it. And so he accidentally sent, massive amounts of ETH to freaking North Korean, hacker group.
Yeah, and you know what? This product, this Fireblocks product, it seems as though that would have prevented that. So yeah, maybe he should have sprung for the Fireblocks over there at Bybit.
Yeah.
All right, so let's check it out. Off-exchange settlement neutralizes centralized exchange counterparty risk. Okay, so one more time. Off-exchange settlement neutralizes centralized exchange counterparty risk. So here's the problem. If you're parking a lot of your corporate treasury capital directly on exchanges so that you can maintain trading liquidity, you're definitely exposed to a significant counterparty risks, right? What happens if that exchange that you're holding all your assets on, goes bankrupt, becomes insolvent, gets hacked or exploited? How many times have we seen that happen?
FTX.
Right? How many times? So here's the solution. Here's Fireblocks Vault. This is a self-custody solution.
Mhm.
So it says the Fireblocks network establishes a cryptographic link that authorizes trading while assets remain safely inside the institution's self-custodied vault. So it says settlement occurs dynamically via authenticated transfer layers. Okay, so it looks as though you can use these different centralized exchanges to trade. But where, so my question here, Mike, is where do the assets actually live? It
Mhm.
says, let me read this one more time, the solution one more time. So the Fireblocks network establishes a cryptographic link that authorizes trading while assets remain safely inside the institution's self custodied wallet. So I'm assuming that that means we, as the the corporate treasury owner, that
Mhm.
we maintain custody of our assets
Mhm.
in our Fireblocks vault. But if we want to send or swap or trade those assets, because there's this authenticated transfer layer
Mhm.
with these big exchanges,
Mhm.
that we would be able to do that while avoiding the risk of having our assets physically located on those exchanges. So I kind of like this. I like this a lot because
Well, I like it because it basically makes all platforms or platforms that aren't non-custodial.
yeah, I mean, so one question that I have is, a Fireblocks vault. I'm assuming that this is a paid product. Anyone can sign up and just gain access to this product without paying some type of fee. So I
I,
just want to, I
let's
want to
keep
take,
let's keep
yeah,
learning. I'll look it up.
let's dig into that. Okay, so it says here real-time threat detection and transaction simulation illuminate DeFi interactions. Look, this is a really, really big deal. So, a great example of this is when I was working with Ellie just yesterday, and we're going through and we're signing transactions in Rabby, right? So we're signing transactions in Rabby, and there are still pieces of information that I would love to be able to see in Rabby that sometimes you don't see. Or if you're using a hardware device, you really need to be careful when you're looking at what you're signing in Rabby, because on the hardware device, it's not going to tell you what you're signing.
So
So
Fireblocks is strictly B2B, business to business infrastructure provider. It's not a consumer wallet like MetaMask or Coinbase or anything like that. So retail investors cannot sign up for an account directly. But you can use these institutions to use this service. So it looks like again they have 2,400 over 2,400 institutional clients, including Revolut, BNY Mellon, a bunch of others, exchanges like Robinhood, Galaxy Digital, and WorldPay. There's a bunch of institutions out there to where you can potentially access, this, extra layer of security indirectly. So,
I like it. I like it quite a bit. So having a transaction simulator like this, Mike, is super valuable
mm,
because I can't tell you how many times on Rabby it's just given me these warnings, and I'm a pretty experienced DeFi operator, so I think for the most part I know what I'm doing. But it's really a good idea to have a simulator here to tell you, hey, you know what? It's probably a good idea if you hold off on signing that transaction because of this, and this. So you got Wallet Connect v2 and extensions, end-to-end encrypted sessions, routing DApp requests directly through the institutional policy engine. So that is just so good. So, for running a corporate treasury, you're going to have institutional policy for, what transactions can be signed, by whom and when and for what reason, right? So I really like just the ability to have an institutional policy engine. I love that. And then you got DApp protection too. So real time database monitoring that's going to block known phishing sites and malicious wallet drainers. So think about how many individuals. Now, I know that this is B2B. And so, Mike, we're going to see if we can get a Fireblocks account set up here. But for individuals, I can't tell you how many people would have benefited from having DApp protection, where, if there was a real-time database monitoring known phishing sites, think about how many times, just Aerodrome, the site has been like, the front end has gone down.
Well, that exploit was the URL hijack.
Right. That's exactly what this would be designed to protect you from.
Yeah,
Yeah. So this is super, super valuable here. All right. So a modular architecture, scaling from direct institutional custody to embedded retail wallets. Wow. Okay. So what is wallet as a service? I'm curious about this. So this is the top layer. These are the applications built on top of this institutional stack, right?
Mm.
So this is interesting. Wallet as a service. So 2 of 2 split between end user device and Fireblocks. Okay. So non-custodial user experience, high scale automation, ideal for fintechs and exchanges. So I'm still, a little bit unclear as to exactly what a wallet as a service product is, but I think
I'm guessing that it potentially would end up being like, say that, like your bank, like they sign up with Fireblocks and they, have this as their, underlying security layer, that they could integrate it into their app, that you use to do your banking on your phone. So that, if you like, say, banks start to offer, Bitcoin loans and, Ethereum loans and things like that, that you would have this underlying security layer, whenever you were making those transactions.
Oh, I get it. So check this out. If I'm a like a fintech, okay, let's say I'm a fintech
Okay.
business, and I've got maybe like a line of credit with a bank like JP Morgan Chase. Let's just
Mhm.
use them as an example, a tier one bank. So that tier one bank, JP Morgan Chase, is going to hold all of their MPC key shares internally. So they've got direct custody of their assets.
Yeah.
Now, Fireblocks, I think, offers this wallet as a service product so that if JP Morgan Chase extends a line of credit for $100 million to the Node.pro,
Mhm.
then we're a fintech and we're going to be able to use a wallet as a service to sign transactions and draw that line.
Exactly.
That's pretty darn cool, man.
Yeah.
That is so cool. Very cool.
No,
And by
I think it's going to help onboard, a lot of non-crypto savvy, businesses and individuals. I mean, that's really what's going to accelerate adoption of, blockchain technology is going to be to make things more intuitive, make them more Web 2, instead of Web 3.
right. It's got to be more of a mullet,
Yeah.
You've got
Yeah.
to have the
Business in the front, party in the back.
exactly.
You got DeFi in the back, TradFi in the front.
That's right. So let's see here. Wallet configurations optimize the balance between transaction velocity and human oversight. Okay, so here's your transaction velocity, here's your human intervention. So you've got a hot wallet, that's fast, right? A third key share.
Oh, hold on.
Yeah, go ahead.
Fireblocks is chiming in. So, with the acquisition of Dynamic, Fireblocks extended wallet as a service into the user-facing layer, and then says Dynamic adds the UX user experience layer, authorize onboarding and embedded wallets.
Yeah, so Mike, when I was building a little piece of code for the Node.pro's website, so
Yeah.
that we could accept, recurring crypto payments, I actually created an account with Dynamic. I had to use Dynamic to, create that code.
Mhm.
I ended up turning it into like its own little product. I call it the Zap button. It allows
Oh
you
yeah, yeah,
to,
yeah,
yeah,
yeah.
like
Like
receive.
for tips and stuff like that.
Yeah. So pretty cool to now know that Fireblocks purchased Dynamic. Um, so
Well,
if
yeah,
you
and the person says Dynamic adds the user experience layer, to authorize, onboard and embedded wallets. So
Right. So let's just take a look at these three. It looks like it exists across a spectrum of, velocity and human intervention. So if you got a hot wallet, that's fast, right? So your third key share held in the cloud or on premises with the API co-center. So fully automated approval for high frequency trading and retail outflows. Okay, got it. So that's your fast hot wallet. And then they've got something called a warm wallet, which is like balanced. So a third key share held on a user's mobile device requires manual human maker or checker approval via the Fireblocks app used for operational treasury. Okay, that makes a lot of sense too. Let's say that you've got an employee, that employee needs to be able to sign transactions for the operational treasury to function. Okay, that's a warm wallet. And then you've got your cold wallet for maximum security. So a third key share held on an air-gapped offline device requires a physical QR code scanning, slow access for long-term reserves. I don't know if I like the physical QR code scanning, just simply because that can be spoofed. You can fake those. But
Wouldn't some of those previous kind of security layer safeguards kind of prevent that, because it was talking about if it's an unapproved wallet address, or like one that you haven't
yes,
used before.
yes, you're right. You're exactly right. Yeah. No, so this
That's
Fireblocks.
where these multi layers, I think, are important. Having these almost like stopgap measures in place.
Right, right. Because if you make one mistake, maybe there's some type of exploit in the QR code, but you've got all of those gates along the way before assets actually move anywhere. Well, then that gives you plenty of time and plenty of security checks to make sure that everything checks out along the entire chain. So I really like this product, man. Okay, comprehensive infrastructure for tokenized asset life cycles and qualified custody. Okay, so they've got a tokenization engine. So the tokenization engine where it controls issuer parameters, ensuring tokens can only be held by verified entities and restricting non-compliant secondary market transfers based on global jurisdictions. Wow, so if you really need to make sure that your tokenized asset is compliant, it looks like this is the product to use, yeah? And then you got Fireblocks Trust Company. So a New York DFS, not quite sure what DFS stands for, but NYDFS regulated qualified custodian, allowing registered investment advisors, RIAs, and VCs to meet SEC custody rules while retaining MPC-driven operational flexibility for staking and governance. So you've got, here's the life cycle, and it's driven by this policy engine. I really like this. I like having a policy engine. I like having an approval, parameters. I like having multiple gates before any assets can move. I like having multiple signers, administrative signers required to move assets. Like all of this stuff, this just seems like a no-brainer when it comes to digital asset security. But this is great. This is really great. Okay, so here we go. The Break the Glass protocol guarantees independent bankruptcy remote asset recovery. All right, so Break the Glass protocol. So number one, preparation. Launch the open source GitHub key recovery tool on an isolated offline machine. Okay. Number two is decryption. Utilize the workspace owner's unique offline passphrase to decrypt the backup zip file. Oh, I see. So this is if the shit hits the fan and you need to break the glass to recover your assets, this is the process that you would follow. Number three, reconstruction. It's going to execute an offline cryptographic reconstruction of the private keys from the decentralized materials. And then number four, takeover. Import the revealed private key into a standard non-Fireblocks software wallet to sweep funds on chain. Okay, so here's the key takeaway. Fireblocks never has unilateral control over client funds. Institutions retain the ultimate takeover ability independent of the platform's operational status. Oh, I get it. So if there's some problem with the operational status of the Fireblocks protocol, then this is what you would do to break the glass and retain custody of your assets. Cool, very cool. So Fireblocks provides the foundational infrastructure for the emerging FinTernet. Okay, the institutional custody landscape matrix. So right now, Mike, we've got a Coinbase, business account here, and it says that that's best for passive or for long-term ETF treasuries or something like that. And so then you've got BitGo. I've heard of Copper. I'm familiar with Copper. What about Gnosis? Gnosis and their Safe product. I wonder why that didn't make it on here, but that's okay. And then you've got Fireblocks on the bottom. It looks like Fireblocks is best for active traders, banks, and fintechs requiring DeFi access and zero counterparty risk.
That's the key. It's like I said, and I love that, the aspect of self-custody, the non-custodial aspect to me is huge.
Yeah, me too. And so here's the conclusion, the insight. So it looks like Fireblocks is not merely a wallet provider. It's a comprehensive, hardware verified operating system for digital finance.
I wonder if this is something that we're going to see, like potentially where like a partnership with Canton.
I mean, would not surprise me. Would not surprise me in the least to see something like that. So what I want to do here, Mike, is I want to play this piece of video content.
All right.
We've got 9 minutes left, and I think that this piece of video content is 9 minutes long. So let's play. It was meant to be.
In legacy cryptographic,
just want to make sure, can you hear the audio here, Mike? Awesome.
Architectures, a single private key acts as the ultimate authority over an address. It is a singular string of data that dictates control over the entire balance. Because cryptographic tokens are bearer assets, possessing the key means possessing the asset itself. There is no centralized database to roll back in the event of an error. A stolen or compromised key results in total, irreversible asset forfeiture, creating a single point of failure that institutions cannot tolerate. Multi-signature wallets attempted to solve this by requiring multiple keys to authorize a transaction. But because multi-sig protocols operate on-chain, they introduce operational drag. Waiting for multiple network block confirmations creates latency that limits high-frequency trading. Furthermore, multi-sig requires specific smart contract implementations for each blockchain. This public on-chain footprint exposes an institution's exact signer logic and contract vulnerabilities directly to public audit. Fireblocks replaces the singular private key with a protocol called Collaborative Multi-Party Computation, or MPC-CMP. Instead of holding a complete key, the protocol mathematically fragments control across multiple independent nodes. The second structural pillar isolates that mathematical process. Fireblocks secures the MPC execution by running it entirely inside hardware-level trusted execution environments. The migration from centralized database entries to programmable decentralized ledgers invalidates traditional custodial models. To manage these assets, institutions require a software-defined matrix that combines fragmented cryptography with hardened hardware. The process begins with the distributed key generation phase. Using a method called additive secret sharing, the participating nodes, typically a client device, a cloud cosigner, and an offline backup, collaboratively generate independent key shares. A complete private key is never assembled or stored in a single location. During a transaction, each node performs a partial computation. These combine to form a valid cryptographic signature, while key shares remain locked inside. The resulting signature appears on the blockchain exactly like a signature produced using standard cryptographic primitives, without needing custom smart contracts. Legacy MPC models, like the GG18 and GG20 protocols, require 6 to 9 rounds of communication between signers to produce a signature. Fireblocks' optimized MPC-CMP reduces this requirement to a single round of communication. Even with fragmented control, an adversary could attempt a slow-moving attack by compromising one node at a time over several weeks. Fireblocks defeats this through proactive secret sharing. The mathematical representation of the shares is periodically refreshed and rotated. If an attacker extracts one share, they must compromise the remaining nodes in the quorum before the next refresh cycle. Once the refresh occurs, the stolen share becomes mathematically irrelevant. Fragmenting the key mathematically leaves an execution vulnerability. The host server operating system remains vulnerable to root-level exploits and memory scraping. To close this attack vector, the mathematical execution must be isolated inside a trusted execution environment. Fireblocks utilizes Intel SGX. The cosigner operates within a shielded memory region carved out directly on the CPU. When initiated, key shares and governance rules load exclusively into this isolated space. The hardware ensures this memory space is heavily encrypted at all times. If an intruder attempts a RAM dump or a physical probe of the processor during a signing event, they will extract nothing but useless ciphertext. Before any transaction logic runs, the hardware must prove its integrity. Upon initialization, the enclave connects to a remote attestation server, cryptographically proving it is genuine Intel hardware, running the exact, unmodified code. Once verified, the enclave retrieves a unique encryption key and binds it directly to that specific CPU. A database cannot be moved, nullifying hardware cloning attacks. Mathematical fragmentation is useless if the environment executing the math is exposed. The SGX hardware serves as an uncompromising physical barrier around the MPC protocol. Inside that hardened physical enclave runs the third layer of the security matrix, the programmable logic of the Fireblocks policy engine. This engine operates the Transaction Authorization Policy, or TAP framework. It intercepts every transaction and filters it based on specific parameters, such as the source, the destination, the asset amount, and daily velocity limits. These parameters are not interface suggestions. Because the policy engine runs entirely inside the SGX enclave, the rules are tamper-proof and cryptographically enforced. To mitigate internal collusion, modifications to these rules require an admin quorum. Sensitive changes demand cryptographic signatures from multiple independent administrators before they take effect. This multi-signature mandate ensures that no single rogue employee can unilaterally alter approval thresholds or divert corporate funds. This is specifically applied to the mandatory whitelisting workflow. By requiring the admin quorum to vet destination addresses, the system defeats address manipulation malware during the copy-paste process. While the MPC math and SGX hardware lock out external attackers, the policy engine is the specialized mechanism designed to prevent internal collusion and operational error. When institutions connect their vaults to decentralized finance protocols, they face a different category of risk. Interacting with trustless smart contracts exposes an organization to malicious code, phishing drainers, and unverified logic. Fireblocks routes decentralized application connectivity through protocols like Wallet Connect v2. Every single interaction, whether providing liquidity or staking, is categorized formally as a contract call. Treating these interactions as contract calls forces them through the policy engine, subjecting Web3 activity to the same rigorous authorization policies. To evaluate smart contract risk, Fireblocks employs a know-before-you-sign protocol, driven by transaction simulation. Before signing off, the system executes a trial run on a forked blockchain. This ledger view displays exact estimated balance changes for the vault. This allows the institution to see the actual underlying intent of the code. A transaction disguised as a token stake might be revealed in simulation to be a drainer script transferring the entire vault balance. This visibility is critical because the approvers sitting in an admin quorum are often risk managers, not blockchain engineers capable of reading raw smart contract data. Authorizing blind smart contract logic carries the same operational risk as losing a private key. Pre-execution simulation forces opaque code to reveal its precise financial impact. Building institutional infrastructure around a third-party technology provider introduces platform risk. If Fireblocks experiences a catastrophic network outage, institutions require immediate, independent access to their capital. To eliminate this dependency, Fireblocks provides a break-the-glass procedure, utilizing an open-source key recovery tool. This process demands strict operational security. The recovery must be executed on an offline, air-gapped machine, guaranteeing the raw private key material never touches an internet connection. An authorized administrator combines the encrypted backup with an offline passphrase, mathematically reconstructing the shares into a usable private key. Once the full key is reconstructed, it can be immediately imported into any standard non-Fireblocks software wallet to move the funds directly on-chain. This mathematically guaranteed offline reconstruction ensures assets are entirely bankruptcy remote, proving Fireblocks never holds unilateral control over institutional treasuries. Financial systems architects face a constant custody trilemma, balancing security against compromise, maintaining execution speed, and retaining autonomous legal control over capital. This chart illustrates how different providers address this trilemma. Fireblocks operates a direct custody model, contrasting sharply with omnibus custody models, where assets are pooled into provider-controlled wallets. Omnibus models concentrate counterparty risk. If the provider faces insolvency, retrieving assets from a pooled trust structure often triggers a protracted legal battle over ownership. Conversely, legacy deep cold storage models provide excellent offline security, but require slow, manual human signing ceremonies. This restricts an institution's ability to provide active liquidity to DeFi markets. By deploying a direct custody model, institutions avoid both operational latency and counterparty exposure. They can actively deploy their own balance sheets while independently fulfilling their stringent fiduciary mandates. As global capital markets migrate to decentralized ledgers, the concept of a financial vault is evolving. Securing these assets is no longer about physical steel. Institutional security relies on a distributed matrix of cryptographic consensus, programmable governance, and hardware-verified trust.
Very cool. I really like this protocol, Mike. We're going to have to take a look at this at some point in the not too distant future here.
No, absolutely. And don't, everybody out there, don't think you can go like FOMO into this, because there is no token and there is no stock. So I looked.
I kind of like that, though.
No, I do too. I do too. I mean, I think it adds like some legitimacy to it, where it's it's not just not that they need it with. I mean, obviously they have 2,400 plus institutional clients and all of that. I mean, they're very well established. This isn't a fly by night organization, but it's just it's definitely not something that the things that they're doing isn't to pump a token. It's not to pump a stock. They're just genuinely providing a service. It's a pain point, and they found a massive pain point. And this is what we talk about on this channel all the time. That you need to find projects like this. If you're going to invest in a stock or a token, you need to find these businesses that have found massive pain points that address dollar value wise a kind of a return on investment for these companies to use their products, their services, and and then of course if it's a token, not a stock, tokens aren't securities for the most part, and then if it's a token, you need to understand the relationship. And these are my closing thoughts. Between the business and the token. Do the tokenomics allow the fees generated or the revenue generated by the company to, in some way, make their way to token holders? Because if this is key, and what I don't understand why more people aren't talking about is if there isn't a mechanism in place through the tokenomics or mechanics for that revenue generated to be shared with token holders, you are holding a meme coin. It is pure speculation that is driving the price of that token. So this is key to understand when you're investing in these assets. Long term, can you trade them short term and trade that speculation? Absolutely, but long term, if you're building a long term portfolio, you need to understand the relationship that the token and the underlying company has, and if that company is actually generating revenue. So, David, what are your closing thoughts?
So I'm just thinking to myself, whenever I take a look at these digital assets, I ask myself, is the protocol, which is a business at the end of the day, making any money? Okay. If yes, great, continue on to the next step. If no, I kind of am going to end my research right there on the token. So are they making money, number one? If yes, okay, then are those revenues returned to token holders in some way? If no, well then uninvestable for me. If yes, well then, okay, great. What is the mechanism by which those revenues are returned to token holders? Once I investigate the tokenomics and see, okay, this is how those revenues are returned, if it is sufficient to make number go up, then I'll consider a position. but it's got to be a business that makes money and returns that money to token holders. And also, Mike, I think that there might be some regulatory risk here
Yeah.
because, like it looks as though that attach detach framework is going to classify a lot of these tokens as securities. So we'll see what happens here. We'll see what happens, but I'm very hopeful for the future. And I can't wait to talk more about Fireblocks and to learn more about that. So I'm going to see if we can maybe get a corporate account over at Fireblocks.
No, that'd be cool. I think that we could take that multi-sig to the next level. As far as that portfolio that we were talking about starting, and and just be able to and cover it on the show like you were talking about.
100%.
Basically have it to where we start it up, and whenever you're going to do something with the the node portfolio that live on the show, we could all sign to authorize those transactions and things like that, and show people just how all of this works.
Yeah, 100%, man. 100%. So thank you everyone for joining live. Yeah, no, Frequency Atomic, thanks, man. Appreciate you, dude.
Yeah, no, definitely. Well, make sure that you join today. Is Jeff doing a show today? Let's see. So yes. Right after this, you should see the blockchain report and Jeff doing a deep dive. And then later on today, David will be doing his 15-20 minute market wrap up where he just goes over charts. If you're a TA person, you're into trading, great market wrap up to catch. He just kind of goes over like all the the major tokens. And if you want to jump in the chat here on YouTube, then you can ask him to see if he'll look at your project and give you some TA on your project. So that is at the Node Network, all one word, on YouTube, so that you can be in the chat and ask them about your project. So with that, thank you all, and we will see you next time here on the Node. Veteran Crypto out.